Good morning, Facebook friends. Thanks for attending. YouTube too. Thank you very much. Although it looks like we may have some issues with Facebook. Give me a moment here. Okay, looks like we are good. Welcome. Thank you for attending my webinar, How to Boost Your Credit in 2025. My webinar typically is how to get your credit score up 60 points in 60 days. So I'm going to go over all of that in just a moment. Let me just button up one more thing here, make sure everybody's on board. Unfortunately, I am flying solo. I think I've got a good handle on the technology here, but as soon as you start believing that, things change. Okay, there. Okay, we are good. Well, thank you for attending today. My name is John Collins. I work with Century 21. I do a home buying program called Own the Roof, teaching people how to purchase with very little money out of pocket, tapping into different down payment assistance programs and grants. So this is more of a follow-up webinar that I do, going over those different types of programs, how to access them, how to get approved for them, what the approval criteria is, and all the things it takes to find a house successfully using these down payment assistance programs and grants, and the ways to get you across the finish line. So sometimes easier said than done. I find that experience is key when using these programs. I find the things that trip people up the most are two things, because there's really three things that really go into a mortgage approval from the consumer side. Number one is going to be your income. Unfortunately, I can't control that, but the second two I can. So we've got the assets, the down payment, closing cost, stuff like that. I help quite a bit with that. So I tell people, do not let the money hold you back. Okay. More often than not, I have at least a couple of people a month that come to me with very little money. I'm talking just a couple of $100s. We can still map out a plan and get the seller to pay closing costs, concessions, look for lender credits, down payment assistance, grants. There's all kinds of things that we can stack up to get you into a house with just a couple $1,000s out of pocket. The third piece of the puzzle is the credit, and that's why I do the webinar today. So my goal is to help people get their credit scores up 60 points in 60 days. And if we can't do that, I certainly want to put you on a path of clarity and give you some predictable tools that you can insert in your credit profile to give you a quick lift within a relatively short period of time. So sometimes credit gets banged up a little bit. I know firsthand. I've had trouble in my life where I had to do a bankruptcy, and it took me, typically you can't buy a house till a couple of years after the bankruptcy, but I took my credit score from basically as low as it could possibly go after the bankruptcy, well into the 700s within 2 years. So I know firsthand how to do these. And today I'm going to give you a glimpse of what goes on in the mortgage world, what they look at, how we can focus on specifically what they look at to get a quick spike in your scores. So, who am I? Already told you, John, 1987. So I have spent over 25 years in the mortgage world. So I know quite well what they look for and how to manipulate these different types of the credit out there to get a quick spike in your score. So who is today designed for? It's designed for, the webinar today is for people that have credit scores anywhere between 5 to 600, okay? If your scores are in the mid 600s, high 600s, you can certainly get some benefit out of this, but ideally what I want to do is take those people that need the lift and help them as much as we possibly can. Or if you have no credit scores, there is a way to build a credit profile. So if you legitimately have no scores showing up on your credit, we can add certain things, or what they call alternative trade lines. We can find things that you pay in your life and get those added to your credit report and build a credit profile for you. So it's a little bit challenging, but I'll align you with the right people to get those things done. And with the right people, I'm talking that their lenders are crucial. They can help us get those things done. If you've had a recent bankruptcy, I want to give you some tools how you can rebound from that. How is it handled? How is it looked at in the mortgage world? Any repossessions, collections, student loans are a big topic right now, especially with what's going on in Washington. And this webinar is for anyone who just wants to understand the mortgage world and how credit applies to it and the different hurdles that they could possibly encounter. All right, I've already given you the why I do it, but I also do it for rental information. Unfortunately, the rental market is in terrible shape right now, and I find that a lot of people are almost feel like they're trapped. So with that being said, I try to give people a pathway to get out of that rental rut, as I say it, and get you into home ownership where you can kind of control your situation and insulate yourself against any rent increases. Heck, if somebody would have told me the average 2-bedroom apartment in the Detroit area would rent for $1,350, $1,400 a month 5 years ago, I would have said it's crazy. But 5 years ago, the average 2-bedroom apartment was $1,100. And what they're forecasting for the next 5 years are 5% increases. So if you work those numbers or extrapolate them out for 5 years, 2-bedroom apartments, in theory, could be up to $1,700 in 5 years. That's just a crazy amount. In my mind, that's well over a $200,000 house right now. So the rental market's in tough shape. There's a lot of misinformation that's given out with regards to building your credit and manipulating it. So we're going to shed a light on some of those things and give you some clarity today. And I find that people are overpaying for credit repair. I think the credit repair industry has just been overhauled with some legislation. So you're seeing some companies race to rebrand and pivot how they do business. A lot of the credit repair companies, I find that's kind of old school. With AI, artificial intelligence entering the conversation, you don't need those credit repair companies any longer. So I should probably do a whole course on that, how to repair your credit using artificial intelligence. The AI can actually help you write letters that you don't need these companies to try and insert themselves in your world and push your credit up with very little success lately. The credit repair companies aren't nearly as successful as they were 10, 20 years ago. So next, goals. So my goal today is for you to get your scores up 60 points in 60 days. We're going to help you identify areas on your credit that are ripe for a quick impact in your credit scores where we can get a quick bounce. We're also going to help you add new credit if needed and give you some timelines. I want to help you set some reasonable and predictable timeline goals as far as getting your credit up in a certain period of time. Because everybody has timeline goals, whether your lease is ending in 6 months or you're on a month to month. I want to give you a path that's going to give you some type of predictable future on that side. Okay, with that being said, let's jump right into it. So understanding the mortgage credit industry. So there's quite a few different credit, what they call repositories. Repositories are just the companies that get all of the credit data. The big ones everyone knows of: Experian, Equifax, and TransUnion. Those are the three big ones that the mortgage world relies on. So when it comes to the credit scores in the mortgage world, first of all, keep in mind, there are hundreds of scoring algorithms. So if you go to some of the free sites like Credit Karma, Credit Sesame, Experian, you're going to get different scores. They have different algorithms that generate those scores. The mortgage industry is one of the few industries that has it standardized. They all work off of the FICO scoring models 2, 3, 4, 5, and so on. So if you find a credit score, there's the FICO scoring model with one of those numbers, you've got something that's it's pretty accurate as far as what the mortgage world is going to pull for your credit scores. So I find that if people go out to Credit Karma and they get a 650 on Credit Karma, their FICO scores might be 630. Okay, so there's roughly about a 20-point difference. I don't want to say that that is standard on all scores because there's different things that go into those algorithms, but that's just a guideline that I use. Now, in the mortgage world, typically we need to see your scores anywhere between 600 to 640 to get something done. We have programs that I routinely connect people with that will do scores down to 580, okay? Those are on a case-by-case basis. So if you have a recent late payment and your scores down to 580, challenging to get done. But if for some reason all your credit cards are maxed out and that's what's driving your score down and it's down to 580, that's something we could possibly work with. So it's a little bit challenging pinpointing, not knowing what your specific situation is. And I always welcome people to schedule time on my calendar. I'm happy to learn what your situation is, put myself in your shoes, and try to give you a path to getting your credit where it needs to be. So never hesitate to take me up on that. So in fact, let me put my calendar link in the chat box right now. There we go. So there's a link to my calendar. Click on that, book a call with me. Happy to learn your situation, put myself in your shoes, and give you the levers to pull and buttons to push so you can get your score up as quickly as possible. So since the mortgage world looks for minimum credit scores at 600 to 640, that's what we want to focus on. They are going to pull all three credit bureaus, and they're going to typically take the middle credit score. There are some programs that may average scores, things like that, but most of the programs that I work with regards to down payment assistance and grants, they are still focused 100% on the middle score. So ideally, what we want to do is we want to look at all three scores, pick the middle one. If that's above the threshold that we're shooting for, great. Then we know the high one is obviously there. If the middle and the high are both too low, then we need to work on both of those credit reports. The low score doesn't matter. So if you've got a 500 score, a 650, and a 670, that 500 really doesn't come into play, okay? So we want to focus on those middle and upper. Ideally, what we want to try to do is we want to take that middle score and high scores if needed and isolate opportunities on those specific credit reports to get you a lift so those scores are in the strike zone where we can get you approved. What goes into a credit score? So there are a few things that go into a credit score. First and foremost, the obvious thing, payment history. Okay. Ideally, we don't like to see any late payments within the last 12 months. There are exceptions to that. Anything in the last 2 or 3 months, that's a tough thing to overcome, especially when it comes to revolving or credit card debt or installment debt like auto loans, things like that. So recent late payments are absolutely crush the credit scores right now. So if you do have late payments, then it's something that you've had on your credit for a little while and you've been a pretty responsible, paying those credit cards or those auto loans on time, it doesn't hurt to make a call to the creditors. I find people are successful with that 50% of the time. So if you have to make that phone call to a creditor, it's basically do not stop at that first line of defense. So basically you're going to call them and you're going to have something along the lines of, hey, I see a late payment popping up on my credit. I had no idea that happened. What do we do to correct that? How can I get that removed? I've been a loyal customer of yours for X amount of time. The first person's going to say, I'm sorry. Unfortunately, it was late and that's the way it is. There's nothing I can do. I appreciate your help would be the answer, but can I speak with a supervisor? I find that when you get to that second line of defense, you're going to find somebody that has not only the authority to do it, but has the ear to possibly listen to your story. Okay. So the other thing we look at, do not pay off collections. Okay. So until we talk, okay, there are several things with collections that can backfire us, but payment history 35% of what goes into your credit score is your payment history and collections. Credit utilization, 30% of what goes into your credit score is credit utilization, and that's where I find a lot of the low-hanging fruit is to get a quick spike in your score. What credit utilization is what is the balance on your credit versus the limits. So if you have a $300 Capital One card and you owe $300, your utilization's at 100%. You actually get hit pretty hard for that. So your credit scores are down. If you're able to pay that balance down below $90, which is 30% of 300, you're going to find your credit scores are going to lift quite a bit. Lately, I'm finding credit utilization balances below 30% are getting 30, 40. I have somebody get a 50-point bounce in their credit by just lowering their utilization. So now I'm finding, or my belief is that the algorithms that generate the credit scores are almost real time. And what I mean by that is it used to be a couple of years ago, if somebody paid their credit cards down, they might get a 20-point lift on their credit scores. Now, since the credit card default rates are skyrocketing, they are giving, in my opinion, they're giving people a larger increase in their credit scores by paying down their credit cards when the default rates are climbing. They obviously consider you a better credit risk. So I'm finding manipulating the credit utilization is one of the best tactics right now. My personal opinion, leave a slight balance if you're paying down your credit cards. Do not pay it off or pay it down to zero. But like I said, 30% of what goes into the algorithms is based on your credit utilization. The third thing is length of credit history. So the longer you've got credit showing up on your account, that's going to give you a couple points there too. 15%. So is what it accounts for in the algorithms. So do not close any accounts. Sometimes people think they'll get a bump for that. You don't. You actually will see a little bit of a dip. And do not pay off any loans early. That can backfire on you. Had someone a couple of months ago thought I've only got 3 payments left on my car. I pay that off. My scores will shoot up. No, she didn't have a lot of credit on her credit report. She lost a trade line. And as a result, her credit scores went down. Okay, so if you have a thin credit profile, and a thin credit profile is someone that just doesn't have a lot of lines of credit on their credit report. So that's what goes into a credit score, or what I focus on. The other things, 10% of what goes into your score is based on frequency of new credit, and 10% are the types of new credit. And that's more credit diversity. So you get a little bit of a lift in your scores, auto loans, credit cards, personal loans, even student loans. That credit diversity helps you and gives you a little bit of a lift. Okay, next thing. How do we handle some of the main or big items that typically come up in conversation? Student loans are the big one right now. So if your student loans are in forbearance, Washington is pulling them out right now. Okay, the forbearance time is over. You need to start to make payments on those. Do not let them put them in default. Okay, if they do go in default, your credit scores are going to tumble. Now, if they are currently in default, it's not the end of the world. We can actually flip it around. It just takes 90 days to do it. So what will happen is a lot of the servicing companies that service the student loans will report it as negative if it's obviously in default. But as long as you make your payments for 90 days, they'll flip the switch and show it as paying as agreed. They will no longer accept a 90-day payments up front. You've got to pay them 30 days for 3 months in a row. What's great about that is what could be a negative on your credit report right now will flip over to a positive. I had somebody last month, she had a 550 credit score showing her credit cards in default. I'm sorry, this would have been 3-4 months ago, but it showed up last month. So she made the payments for 90 days. And at the end of 90 days, she went from student loans in default to paid as agreed. Her score shot up 100 points because it went from a negative to basically a positive. So the student loan servicing companies are responding that way. It used to be where you could pay 90 days and it would flip the switch, but they no longer allow that. Now, if your payments are deferred, that's fine. It means you're still in school, but the interest clock is ticking and your balances are going up. And if you want to buy a home, your loans can't be deferred. You have to take them out and get some type of repayment plan on it. Now, some of the programs will not allow a zero payment. And the student loan companies are doing this. They call them income-based repayment plans. So if your income's low enough, they'll take you out of forbearance and basically, or even out of default, and they'll show a zero payment on your credit report. That's not acceptable for the mortgage lenders. They want to see some type of payment on those things. So what you need to do is call them and say, hey, I appreciate the fact that I'm on an income-based repayment plan, but I'm tired of watching the interest compound and the balances go up. I want to start making payments on these. So I can afford $20 a month right now. So regardless of what your balance is, I had somebody that had almost $200,000 in student loans a couple of months ago. She got an income-based repayment plan of $20 a month, and the lender used the $20 a month. Okay. Where normally if you don't do anything, they're going to hit you with 0.5% of whatever the balance is and use that to calculate in the numbers that determine the amount you can qualify for a mortgage. Well, 0.5% of, let's just say 100,000 is $500 a month. That really makes a big dent in what you can afford, depending upon where your income is, of course. So we want to watch it. So those income-based repayment plans, we want to get a small payment on there, and we want to get them to report those small payments to the bureaus as soon as possible, or get a letter from the student loan servicing company stating that your payments are $20 a month for the next 12 months or something like that. So that will work as well. So that's how we handle student loans. The next big issue that I'm running into lately are repossessions. So fair amount of repossessions. There's a lot of reasons that people go through it. Either they co-signed a loan for somebody and that car got taken back. A lot of automotive repairs. So I had a lady yesterday that had to let a car go back because she bought it on what I call a B lot, one of those lots that may have 20, 30 cars and financing on the spot and things like that. She bought the car, drove off. 30 days later, one issue, cost a couple $1,000s, and a month later, it was another major issue that she couldn't recover from. She had to give the car back. It's unfortunate, but that's just the way it goes. So sometimes things like that pop up beyond anyone's control. Unfortunately, I don't think those B lots have the mechanics on site to typically vet the cars as well as they should be before they put them up for sale. So that being the case, I find that there is more repossessions when I talk to people where they bought them off those B lots. So maybe they're better deals. I don't know. But for whatever reason, I'm starting to see a tick up on that side. So if you do have repossessions showing up on your credit, depending upon the balances, it's not a bad idea to possibly call the repossession, whoever the creditor is, and try to get some type of repayment terms. If you're able to do that, we can take those payments and factor those into your numbers to figure out how much you can get approved for. If it's an actual recent collection, there's not much we can do without that payment. Now, if the repossession is over 3-4 years old, I'm actually having success. I had a couple people that were able to get approved with old repossessions on their credit. Now, they were isolated. So there was this isolated repossession and the rest of the credit was good. So if it was one thing on your credit, it's not as life-defining as it used to be with regards to applying for a mortgage. So they weren't asked to pay those things off. So There's a lot of factors that go into that, but there is a glimmer of hope that maybe things are changing a little bit on that side. And then, of course, if possible, if you could just pay the repossession off. But usually, if they're going to repossess them, they're usually pretty sizable. So the next topic, bankruptcies. There's two types of bankruptcies. There's a Chapter 7 and a Chapter 13. Chapter 7 is where you wipe the slate clean. Chapter 13 is when you reorganize your debt. I always tell people, if at all possible, treat your personal life like a business. If you are in that type of shape where you can't make those payments and you have to seek bankruptcy protection, try to do the Chapter 7 if at all possible. I'm 60 now, and was raised that, hey, pay back all your debts. I'm telling you, don't do that. Avoid Chapter 13 if you can. It is a long haul. I have a lot of respect for people that are able to do it because those payments are sizable and they go on for 5-6 years. So now, if you are in a Chapter 7 bankruptcy, we cannot do anything till 2 years after the bankruptcy is discharged. But once it's discharged, we want to build credit as soon as possible, picking up secured cards, secured loans. And it's important that you don't have any late payments after the discharge. Now, the algorithms that generate your credit scores, like I said, they're getting smarter and smarter. They know once you've had a bankruptcy, you got to pass. And as a result, they reward you for it. So if you start building credit, your scores are going to go from low 500s, maybe high 400. You're going to skyrocket up to 700 in a relatively short period of time, maybe a year and a half. You can get your credit scores up if you follow some of the steps that I give you. The problem is, if you're late on anything, my personal opinion is you're going to get hit harder than the person that did not do bankruptcy because the algorithms know you just got that pass. Okay, so it's important that you stay on time with those payments. Chapter 13, when you reorganize, what happens is they take all of your debts, put them together, negotiate a balance, negotiate them down a little bit, and then you pay a trustee, and that trustee in turn pays all the creditors that are included in that Chapter 13. It is possible to get a mortgage if you're in a Chapter 13 after you've made 12 consecutive payments to the trustee on time. As long as you've had 12 payments on time, we can get you approved for a loan. We just have to factor in that payment that's made to the trustee. And of course, you have to have acceptable credit scores. Okay. I have only had a trustee fight one of my buyers one time as far as purchasing a home because we have to get trustee approval. And ultimately, my buyer's attorney filed a motion and the trustee backed down and let us buy the house. Okay. So it does work. I've done a couple of dozen of them, so I'm very familiar with it, but it's not an easy road, but we can certainly get it done. The last item I want to talk about on this page, collections. Collections are something that are just everybody seems to be getting them now, specifically in the medical world. Right now, unfortunately, medical insurance isn't what it used to be, and I feel like I get nickeled and dimed for all types of medical expenses. The algorithms are a lot more friendly to medical collections. So if you have a medical collection, don't worry about it. Don't pay it. Let's focus on putting your money where it works the most for you. So medical collections technically are supposed to be left out of the algorithms and factoring your credit scores. So as a result, no lenders are factoring them in or asking you to pay them. Okay. Unless we get a collection above 3,000, I think 2,500, maybe 3,000. When you start getting really big collections, it might be a topic of conversation. Haven't seen those, but certainly something. If you have a large collection like that, I'd love to research it and find out how the mortgage lenders are handling those. Other collections, however, those are things that we have to at least address. Maybe not tackle, but at least take a look at them. So if you have collections that are over 2 years old, I always tell people, please leave those alone. Don't touch them until we talk. More often than not, if you have a collection that's over 2 years old, let's just say cable companies always seem to be one that pop up a lot. For whatever reason, you didn't turn in 2 remotes when you turn in your cable box, and they put a $50 collection on your credit report. If it's over 2 years old and you pay that collection, they're going to report it to the credit bureaus as collection paid, maybe next month, May 2025. It's going to bring your credit scores down. It's going to reactivate that old collection. So I always tell people, if your collections are over 2 years old, please don't pay them. We don't want them to reactivate them and bring your scores down. Now, if your collections are 1 to 2 years old, we might want to run those through a simulator to determine whether or not they need to be paid. And collections that are 0 to 1 years old, we need to address those on a case-by-case basis. Lately, any collections 6 months or less, we probably want to pay those off. If we can, then you could get a lift in your credit. Not where you were before the collection, but you might be able to retrace 50% of what you lost. So that's how I handle student loans, repossessions, bankruptcies, and collections. So next thing, I want to go over my steps, how I look at a credit report, analyze it, and determine what's the best way to get a lift in your score. So the first thing we want to do, we want to get a copy of your credit report. You can get free copies of your credit report at annualcreditreport.com. They don't give you the FICO scores. I think you might be able to pay a fee and get those FICO scores. If you have the budget, certainly worth doing. From there, we want to determine if we need to work on 1 or 2 of your credit scores. So remember, we want to look at that middle credit score and your high credit scores. As long as we can get both those scores are above 600, I typically have options for you. We want to focus on the middle score and the high score just to determine where we need to get the lift and what bureaus to work on, what credit bureaus that is. So we also need to understand your profile and what's driving those scores down. That's the first thing I look at, okay? Is someone's credit scores down because they have late payments, collections, things like that? So once we can determine what's dragging your scores down, then we know how to deal with it. Can we pay down your credit scores or your credit cards to get a quick lift in your credit scores? Do we need to open up an account? Do we need to ask a family member for you to be an authorized user on their account? There's a lot of different things we need to look at. We do need at least 2 to 3 trade lines. And a trade line is just a line of credit on your credit report. So typically we need to have 2 or 3 trade lines on your credit report. They can be new, they can be old, or we can even add alternative trade lines. Those trade lines, we need to have 2 or 3 that have a 12-month track record. So I'm going to go over alternative trade lines if you don't have it. Now, old trade lines work. So if you paid off a car 3 months ago and you had good credit history for that for 3 years prior, that's a trade line, even though it's not active right now. Okay. So we need to sometimes we need to run your credit through a simulator to determine what is going to be the best way for us to get a spike in your credit score. There are credit auditors, credit simulators, different things like that. Usually we can pick those things out. If your score is too low or you're right on the fence, say you've got a 599 score and we need a 600, sometimes it's an easy thing to pick out if a credit card's maxed out. Sometimes it isn't so easy, and we need to run it through a simulator to give us a couple of options. That way we can work those options and then maybe get your score up in a relatively short period of time. Now, if we need to add new credit, there are secured credit cards, secured loans, and authorized users. Those are the 3 things that are available for quick spikes in your score. And I'm going to go over those tools in just a minute. The other option is if your scores are low enough, we might want to consider sending out dispute letters to the credit bureaus to challenge some of the things. Now, if you do decide to send those dispute letters out, and you can actually go to some of the artificial intelligence websites and ask them to write you a dispute letter and then just print it out. It's actually becoming that easy. You don't want to dispute more than 5 things at once. Otherwise, the credit companies can actually report your letter or consider your letter frivolous and just set it aside. So if you've got 10 negative things showing up on your credit report and you challenge all 10 things, chances are they're just going to throw that in the trash as a frivolous request. Okay, so these credit reporting agencies do have some leverage under the Fair Credit Reporting Act that they do not have to respond to frivolous requests. So that's why I say don't challenge more than 5 at once. All right, the do's. These are the things we want to do. You want to get your credit report, get your credit monitoring service set up with Credit Karma or Credit Sesame. There's a lender I work with, Belong Lending, that's happy to pull people's credit, get your FICO credit scores, and run your credit through a simulator to determine what things need to be taken care of. They do charge you for that. That's a $70 fee. There are a couple lenders that I work with that do offer that service. So feel free, reach out to me. Always happy to point you in the direction there. The other thing we need to do is, if you have credit cards that are maxed out, there's a couple things that you can do. One, you can call the credit card company and ask for a credit card increase. Finding that's a little bit more challenging than it sounds, just for the fact that with the default rates as high as they are for credit cards, I don't think they're giving out increases nearly as much as they used to. So the best alternative is to reduce your balances down below 30%. So we want to look at your credit cards. If you have something that's maxed out, pay your credit cards down below 30%, you're probably going to get a good 30, 40 point bounce out of that. Now, if you're over your limit, you could get a 50 point bounce out of that. So keep in mind, if you have a credit card at $300 and it's showing up on your credit card as $320 that you're over the limit, the algorithms spank you even harder for going over your limit. Okay, so try to pay those down below 30% and you'll see a pretty big bounce from there. There are some other sophisticated maneuvers as far as how and when to pay those down. That schedule a call, I'm happy to tap in. I tap into my knowledge with regards to how to manipulate those. I get it. There's never extra money in my household, and I find that that's the way most people roll nowadays. So if you don't have the money to pay your cards down, there is a way to actually game the system a little bit. Schedule a call with me. I'll be happy to share that with you. One thing I will tell you right now, if you pay your credit cards down, please do not pay them off totally. I find that people are getting a little bit higher lift by leaving a slight balance on their credit card versus zero. Okay. And with some of the programs that I work with, the down payment assistance programs and grants, their credit scores are it's a hard number. So if it's going to take a 600 credit score to get approved for a down payment assistance program and your score's at 595, there's no leeway. So sometimes it is a game of inches. So keep in mind, do not pay it off, pay it down to $10. And you might get that extra point or two, might be the difference. So actually just had someone 2 days ago that came in with a 601 credit score. They're able to get it done. Okay, so keep that in mind. If at all possible, get added as an authorized user. If you have a friend or family member, it's not as awkward a conversation as a lot of people think it is. I mean, it's never comfortable asking someone for help, but it's not that challenging. Who wouldn't want to help out a friend or family member? You're not asking for money. I know the conversation in my mind would go something like, hey, is there any way you could possibly help me out? I just applied for a mortgage and they're telling me that I could get it if I just have one more trade line showing up on my credit. I don't need a credit card. I don't need money. I just need you to add me to your credit card as an authorized user. And that would be enough. So not as terrible a conversation as a lot of people think it might be, because you're not asking for anything other than a little bit of help and a phone call. A lot of times people just pick up the phone, give out your social security number, and in a few minutes you're added to it. Okay. So next thing, open up a secured card or secured loan as soon as possible if you need to get a quick spike in your credit scores. Okay. You can also add these for trade lines, but since it's just going to be added, you're not going to have that 12-month history. But these are great tools. I'm going to go over those in just a few moments in detail. And if we need to add trade lines to your credit to create that 12-month history, we can get rent added, cell phone bills, car insurance subscriptions. I'm going to give you a complete list of that in just a few moments as well. And we want to set up payment arrangements for collections over $2,000 if necessary. Call me first, just so we can map that out. I don't want to see you put money in a place where you're not going to get some benefit for it. Okay, so those are the things to do. The things not to do when fixing your credit: do not apply for new credit. Okay, it gets very tempting when you go out to some of those sites. Credit Karma might say, oh, you have a 80% chance of getting approved for these 3 credit cards. Don't do it. You will all of a sudden get 3 credit inquiries, no credits issued. Remember, I said the algorithms are getting smarter. If you have 3 inquiries and no credits issued, I don't know this for a fact, but I have a feeling the intelligence is going to start hitting people a few points because there's no credit issued, which means your credit, or you might not meet the criteria, and the algorithms, I don't think, are going to be friendly for that. So don't apply for credit unless you're going to get it. Anything I give you today, the tools, these are tools that, in my opinion, you're 99% chance of getting them. The only time you won't get some of these tools is if you left that creditor hung out, if you didn't pay them in the past. So if you go to get a Capital One secured card, but you have an old Capital One that's in collection, they're not going to do it, even though it's a secured card. Same with some of the credit union tools I'm going to give you. If you left the credit union bank account overdrawn and walked away, they're not going to issue any of these credit repair tools to you. So keep that in mind. Now, do not blindly pay off collections. Remember I said, paying those old collections off just reactivates them, so they show up more recently, paid on your credit report. So if it's over 2 years old, please leave alone. If we need to pay them off, we'll pay them off after we get your scores up. Because once we get your scores up, we get them locked in for 90 days. If part of that approval process is predicated on you paying those off, we can do that or get payment arrangements. And at that time, they don't care if you negotiate the balance down. So if you do it in advance, it's going to show up collection, paid, less than balance, satisfied for less than original balance type of thing. Your scores are going to go down, guaranteed. Okay. So set up a call with me. I'm happy to walk you through that. Anything less than 2 years, case-by-case basis. Medical, just leave that alone. 1 to 2 years, we're going to run those collections through a simulator. Any collections that are less than a year, we'll have to address that on a case-by-case basis. More often than not, anything 3-4 months or less, we're probably going to want to pay those off in full to try that'll probably get your score up a little bit. From there, we don't want to pay off credit card balances to zero. Don't pay off any loans prematurely, and don't become an authorized user on a new account or an account with late payments. Okay. It just doesn't help you. And please, by all means, do not employ a debt consolidation services. I almost want to say never do this. Debt consolidation services are starting to surface again, and they usually do as the economy starts to dip, or the need rises is what I should say. But debt consolidation services are, in the lender's eyes, at least in the mortgage world, it's just another way of doing a bankruptcy. It's another way of doing like a Chapter 13 bankruptcy. So what happens is these debt consolidation services, you sign up for them thinking they're going to help. That's the pathway to get you to the promised land so you don't have to deal with all these creditors. What they do is they take all your debts, don't pay anyone. So they take all your debts, put them together, tell you make your payments to them. So they're going to take all your payments for probably about 6 months. They're not going to pay any of your creditors. Okay, you're going to tell your creditor, oh, I'm in debt consolidation. Okay, so they stop calling you because you're in consolidation. But the consolidation companies do not forward them any payments until they get paid first, which could take up to 6 months. And then just when your creditors are threatening to sue you or done with you, that's when these consolidation companies start to drip the money out to them. Okay. Now, as painful as that sounds, the mortgage world, they consider that another form of bankruptcy, like I said earlier. So if you are in that bad a shape right now, I would tell you you're better off seeking bankruptcy protection because there is some protection there. The creditors can't touch you. There are strict guidelines, strict rules that they have to adhere to. So if you do debt consolidation services, it's just like doing Chapter 13 bankruptcy without the bankruptcy court protection. So I'll leave it at that. That's my feeling on those companies. All right. So that was my don'ts. Now let's get into some of the credit building tools. First one, secured credit cards. If you don't have a credit card, great way to start out, great way to build credit. Capital One is the big one in this space, and I like them. They reputable, they do a good job, they're easy to make payments with. Some of the other ones that are out there, I don't think shine nearly as much. Check if you belong to a credit union. Some credit unions offer secured cards too. But Capital One, basically what it is, you can apply for it at Capital One. You're pretty much guaranteed to get it. They will ask you to send them $300. They're going to send you a credit card with a $300 limit. That will typically bounce your score 20 to 30 points in about 30 to 60 days. Once you receive the card, it's very important that you use it. The quicker you use it, it forces them to get it set up and submit that data to the credit bureaus. Try not to charge more than 30% of the balance. Okay. May not always be easy to do. So just try to find when it reports to the credit bureaus and make sure that your balance is down below 30% prior to them submitting the data to the credit bureaus. If you need help or coaching on that side, how to find that date, how to do that, schedule a call with me. Happy to go over it with you. Or if you do pay them up, try to pay that balance down as quick as possible. Okay, leaving a small balance. So that's the secured card. Actually, it's a secured MasterCard, I think is what it is through Capital One. Secured loan. This is one of my favorite tools. So I actually do my banking with a local credit union called Michigan First. They offer what's called a secured loan. And that's the reason I bank at Michigan First. I find that they really do a good job helping the people that need it. So, and I've actually used this particular product for my daughter. When she turned 18, I tried this out and it worked famously. So at 18 years old, we were able to get her, I think we added her to a credit card too. Those two maneuvers pushed her credit score up to the 700s right away. So in fact, she actually boasts that her score is higher than mine and she's still a young lady. So, anyways, right now, what this personal loans are, you actually can go to any Michigan First branch. There's several in southeastern Michigan. I believe there's other credit unions across the country that offer this too. You could actually try Googling secured loan. Just make sure that it's going to work the way that I describe. Now, the one through Michigan First, you give them $525. They charge $25 to set it up, so that money's gone. They take the $500 that you give them and they put it in a savings account. Okay, they're going to open up a checking and savings account for you. So that $500 goes into your savings. It's locked down, so you can't touch it. At the same time, they're going to give you a $500 loan, and they're going to put that $500 in your checking account. So if you go on your online statements, it's going to show $500 in savings, $500 in checking. It looks like you got $1,000, but that $500 in savings is locked down. They're going to ask you to pay that $500 loan off over 6 months. So they're going to take $80-something a month out of your checking account to pay that $500 loan off. At the end of 6 months, once that loan's paid off, they'll release the money in the savings account. The great thing about this particular loan is they report it to all three credit bureaus, and it reports as a personal line of credit, which is one of the hardest things to get. I find that people that use this maneuver will see their points go up anywhere from 40 to 60 points in 45 to 90 days. It is a great credit rebuilding tool. So if you need some help, feel free to reach out to me. Always happy to point you with a representative at Michigan First. I think this is one of the best tools out there. Next thing, authorized users. Okay, we talked about that. Asking a friend, family member, how to become an authorized user. This works 90% of the time. Okay, 10% of the time it works, but it doesn't work as favorably 10% of the time. So, and what I mean by that is they changed things about 15 years ago, where when someone's added to a card, the reporting date or the open date for the card that pops up on your credit report is supposed to be the date that you're added to the credit card. A lot of them don't do it that way. I've discovered it is a manual entry. And most of the people that you talk to, they're like I am. They're phone jockeys, and they're timed for their calls. So they typically don't go through that exercise, and they give you the open date of when the person who opened the account opened it. If that makes any sense. Okay, yeah. So the original time that the account was opened is what they put down 90% of the time. That gives you a bigger lift than if it's just added last month. Okay, like I said, it works 90% of the time, but I just like to be upfront. Sometimes people go, hey, I only got a 10, 20 point lift by that account getting added instead of more. So that's the reasoning behind it. A couple of months ago, I had a young lady that was added to grandma's Sears Roebuck card. She got a 100-point lift out of being added as a authorized user because for whatever reason, she got a $20,000 limit on her Sears Roebuck, and it'd been around since 1976. Now, this young lady was born in the 90s, so if they look at it in detail, they'll be able to sniff it out, but it doesn't matter. Her score went up that much. So totally an anomaly. Never had that happen before, but these authorized user techniques still work. Okay, alternative trade lines. If you don't have access to some of the other tools, or you don't have the 2 or 3 accounts showing up on your credit report to give you a credit history, and we need to add alternative trade lines, this is what we can do. We can add rent, auto insurance, PO box payments, storage units, cable bill, cell phone bill, renter's insurance, utility bills, subscriptions, Netflix, gaming, gym membership. 6 months ago, I had a young man who was actually living in his future mother-in-law's basement, and he was buying a house for him and his fiance. Didn't have any credit. What we did, but he was a gamer in his future mother-in-law's basement, and he had Xbox, PlayStation, and I think there was one other. I don't know, maybe a World of Warcraft membership, something like that. And he had been paying those out of his debit card through his checking account for a couple of years. So we were able to get his 12 months bank statements showing, $20 for Netflix, $10 for the game, $10. So we were able to take those little debts, send them to a third-party aggregator of credit, so a credit company, and they had those added to his credit profile. So it's a little bit of work. We just 12-month statements, give those to the lender. Lender gives it to the credit aggregator. They put it on their report, and credit supplement company is what they call it. And he was able to buy a house. So he didn't have a credit score. So we were able to get him through on a Flagstar Bank zero down destination home. He actually ended up buying a home out in Mount Clemens. So worked out quite well. All right. Next thing, credit monitoring services. Credit Hero is a good one, credithero.score.com. They will monitor all 3 credit scores. Experian, if I had to choose, I like Experian because obviously that's going to give you the experience score. and they do have a FICO score tracker and Credit Karma. Credit Karma is going to give you the Equifax and TransUnion. So if you've got Equifax, TransUnion, and then Experian through Experian, you've got all three credit bureaus. Okay. And what's nice is you can set up the monitoring services. Anytime something changes on your report, you're going to get an alert. Okay. So if you challenge things on there and those disputes go in your favor, you'll get an alert. So, and you can always check and see when your balances are on your credit report. And if you need to see the reporting dates of when certain credit cards report, you can actually see that too. So, Experian and Credit Karma are probably my go-tos. Credit restoration services. Lexington Law, National Credit, actually National Credit Care just rebranded after that legislation that just came through. So I'm not a fan of these companies right now. I think you can do a lot of these things on your own. In fact, I'm actually going to be building a course teaching people how to fix their credit on their own. And that's going to run in conjunction with another course that my 6 months to home ownership course. So for people that need help from 0 to 6 months. So there is a pathway for people out there, and I just find myself having a calling to help people with it. So those are the credit building tools. Where do we go from here? Well, I always tell people, schedule a call with me. Happy to learn your situation, put myself in your shoes, and answer any questions you have. Okay, whether it's 2 weeks, 2 months, or 2 years, I've been working with some people over 2 years. So I've been around doing this for a long time. My passion is giving people a pathway to home ownership. And like I said earlier, the two things that I think that trip people up the most is the money and the credit. And unfortunately, the income too. But I can't show up and work for you. But I can certainly show you how to access all the money and give you a pathway that way, and how to get your credit in shape. So hope you got some benefit out of this today. If you have any questions, never hesitate to reach out to me. If you're watching this on YouTube or Facebook, you'll see my contact information there. Click on the more area. If you're also out there, please subscribe to my channels. Give me a thumbs up, like it, hit the alarm button, and you'll be alerted anytime I upload new content. My team and I are working on making commitments to upload more content and organize this so we can start giving people a more clear, concrete path to home ownership. So thank you all very much for attending. My name is John Collins, and hope you enjoy the rest of your day. Take care. Goodbye.